Okay, folks. Today I have Justin with me. We're going to strategize Tesla. So let's go ahead and dive into Tesla today. Hey, Justin, can you hear me?
Yep.
My screen's up and running, right, on your side? You can see my screen?
Yep.
Cool. Okay. So if I heard you right, are you own shares of Tesla and you're bullish on it?
Yep.
Okay. Uh, so give me a little bit of insight on that. Are you looking to stay bullish on it long term, or what's your thought process on Tesla?
Yeah, I guess I'm bullish long term. I don't have any, real short term prediction, I guess.
So, and if I heard you right, you at least own 100 shares. You have at least 100 lot, right?
Yep.
Yeah. Okay. Perfect. Okay. So now that being said, okay, let's look at some of the options first, and then we go from there. Fair enough, kind of thing.
Yep.
So let's say the first step is, okay, let me find you a options contract that behaves like a stock. Fair enough, because if you're long Tesla shares, 100 shares, okay, you ideally want at least something that is giving you a better risk reward than the actual shares, which is buying a contract that will behave like a stock, pretty much. So the best contracts, I guess, I would look out for is something that is really far out in time. So let's take a look at those and see what pricing we can get there. So I'll start with the furthest out, which is January 2023. Okay,
Okay.
and uh, and then I will go into deltas here. Okay, so anything that says one delta, that means that's exactly moving like a stock. Pretty much for every dollar that the stock goes up, the delta goes, the options contract moves up by $1, right? So that's the whole idea here, the notion, right? So let's go ahead and go down a little bit, because if we did that one, you would be exhausting about the same amount of capital, right? So let's see if there is something in the 80s first. Okay, I found something in the 80s. So I got a $200 contract right here. So fair enough. This seems sounds good on in terms of pricing right here. So that's almost half the price of the share. So fair enough. This is one good contract to get into. Let me just look at the theta. Okay, theta is pretty reasonable for the stock price. Let's see the implied volatility, yeah, that's not too much outside. See open interest. Okay, so now guess what? The 300 has got far much volume there. So I would like to do it where there's heavy open interest. So 300 is good right here. Let me check out something closer a little bit. January 2022. Let's go to 300. Yep, that's pretty fair too. Let me look at the extrinsic value. $50. Fair enough. Yeah. So it's not too bad. Okay. So if I were in your shoes, okay, this is what I would do. I would either do the January 2022 or I would do the January 2023 contract. That's kind of the idea here, is just make sure that we have either one of those contracts, January 2021, January 2022 or January 2023. So in that sense, I feel that like, are you super bullish, Justin, on Tesla? Like, you think you'll hold it like really far out, or what's your thought? Are you going to exit maybe in a year or so?
No, I'm not planning on selling.
You're not planning on selling? Then I would personally go to the January 2023 one, really far out, and buy the 300 call on January. Hold on a second. Just turn off the phone here, but let me see the extrinsic. No, the delta again real quick. 80, yeah, 300. 300 is fair enough. And there's a little bit of open interest there. So I would buy the $300 call. So now let me break this down for you, Justin, okay? If you own 100 shares of Tesla, you're pretty much using $40,000, right? Like your current value of the position is 40,000. Make sense?
Yep.
Right? So now you're taking that, you're closing that out, and now you're going to just spend $19,700. Okay? And for
Okay.
every dollar that Tesla goes up, you will make 80 cents on a dollar. Okay? And it will just keep growing. If it keeps going higher from these levels, it'll go from 80 to 90 all the way to 100, right? Which means that you'll make 1 to 1. $1, you make 90 cents on a dollar. And every dollar it goes down, you will lose 70 cents on a dollar, 60 cents on a dollar, 50 cents on a dollar. That's kind of the whole idea here, right? So in your shares, every dollar it goes up, you make a dollar. Fair enough. And every dollar it goes down, you lose a dollar, pretty much per share, right?
Yep.
So what this does is de-risks you two ways. Your capital just went down half. Okay. You're making 80 cents on a dollar. You're giving up that 20 cents on the dollar to have that capital reduction, and you're giving up that 20 cents on the dollar, but it is growing if it goes up. So it goes 90 cents on the dollar, $1 to a dollar as it grows. And on the downward side, it's even better because if Tesla happens to go down, you're only going to lose like 80 cents, 60 cents, 50 cents on the dollar. While in your shares, you're going to lose all kind of thing. Like you're just going to lose that money dollar for dollar, pretty much. Are you understanding that logic, or am I confusing you a little bit there?
No, that I guess it makes sense. Yeah.
So that's why I promote this type of approach, because the whole idea here is you have nothing to lose by doing this. If anyone owns 100 shares of Tesla, this is probably the best approach to kind of de-risk yourself. Well, why own the 100 shares of Tesla? Well, you can do this instead, and this behaves like the stock, but you just have better risk reward than the shares. Fair enough. The only reason why people don't do this is because it seems a little confusing to some people, but I just kind of simplified that shares for you, which means that's what this means. It's pretty, down and dirty clear kind of thing. Make sense?
Yeah.
So that's how I help folks, is kind of at least make sure that they get the right contract in, that they will be able to manage at a lower capital kind of thing.
Okay. Is that yeah. Would have to pay income tax on my shares though.
Yeah,
Right?
yes, that is a catch. Yes, if you're doing this out of a non IRA account, then you have to pay tax on it. Yeah.
Okay.
Have you held it for a year at least?
Yep.
Okay, then it's now you deciding whether to pay tax today or in the future, because you'll be taxed at a lower rate anyway, right? It's going to be the lower capital gains rate. I'm not trying to be political here, but things can change in that space in the near far future. Right now, the rates are pretty low for long
Mhm.
term, right? Because they changed it, and with the new policies that probably Biden's team's going to implement, they may consider changing those long-term gains rates and all that. So we don't know yet what can come out of it, but I think these are probably going to be the lowest rates you'll ever see in terms of taxing at long term.
Okay.
Yeah, but no, this is good that you're being cognizant of the tax there, right? They're like a lot of people when I share this strategy, Justin, is they're like, I wish I knew this when I just bought into Tesla. Back in the day, I would have done this instead.
Yeah, I've definitely thought that, but that was quite a run.
Yeah. But no, it's fair enough. There's nothing wrong in owning shares. And then I heard you say you're also you're doing covered calls against Tesla as well, right?
So I did when it was at 500, and then I got out of that again.
Is that okay? So let me share one thing. Once you buy this call contract, it behaves like a stock, right? So which means you can sell calls against this as well, just like you do on the shares.
Okay.
So it's just not called cover calls. It's like called a modified poor man's covered call, something like that.
Okay.
But this can behave like your asset. The call contract can behave like your asset as your shares. You keep holding on to it, and then you just sell calls against it. Yeah.
Okay.
Like just consider it. It's just something to think about. And then I always tell people that make sure you keep a spreadsheet of when you did do this transaction. What was the price at that time? Right? Like right now it's trading. If you happen to do it today, it's trading at 408.64. You keep a record of it. That at this time I did it at 408.64 because the call contract is 300 and a specific date. It won't tell you what price you got in at. Right?
Okay.
So you can like track it, right? Like okay, I actually did the flip at 408 kind of thing. Yeah.
Right.